Okay, good afternoon everybody and welcome to this edition of Ask the Experts. My name is Capolingua. I'm the market analyst over at Think Markets, and it is a pleasure to be with you as we talk about, well, whatever you want to talk about. This session is really about getting your portfolio questions answered. Okay, Wesfarmers. Last time we looked at it, actually here we've got my scratchings from last time. Okay, well that's a relief. Okay, so you can see the last time we looked at it, we clearly talked about how long-term trends hold and how Wesfarmers has been adhering to the long-term trend. Clearly we talked about this idea that right now, or when we looked at it, I think it may well have been where that line stops on that day, that it is in some trouble. We probably said that before we had any, or we were going to build any confidence that things were getting better, we probably said that we'd like to see this sort of a pattern emerge. Okay, now funnily enough, as much as I would have thought Wesfarmers was in a lot of trouble the last time we looked at it, the pattern that I said you needed to see has actually occurred, and that's brilliant. So that is good news for people who are holding Wesfarmers. I reiterate what I said before, that we have moved back into these high peaks and high troughs, and really all I'm drawing here is the exact scratchings we had on screen last time. There's our high peaks and high troughs. Okay. Looking like we're holding now this long-term trend zone. We talked about how the trend zone can be spongy at times. To be fair, for Wesfarmers, it's been perfect. And what we'd like to see before we get in is something that looks a little bit like that. And on the candle, I think you do know what candle I was drawing. Probably in your mind, you probably think I know what candle he's drawing right now. This is the one we want to see in that zone. That for me would be 100%. Wesfarmers has held that long-term trend and it's onwards and upwards from there. And hey, we might not get a pullback in there. It might not happen, but I'm just saying to confirm the long-term trend zone, that's what you want to see. It may just keep going up, and that's brilliant too, because it's doing the right thing. We've got nice candles and we've got high peaks and high troughs. Then we looked at the Wesfarmers valuation, which is set up and on screen. And what we said was, if you are looking at what the brokers are thinking Wesfarmers should be in terms of sort of just pegging it at a PE to compare against, around that sort of 25, 26, which is looking at sort of the median forecast for the brokers. Okay, where are the brokers thinking Wesfarmers is appropriate value, fair value for them? And we said that, look, it's probably looking a little bit overvalued at this stage. And when I say a little bit, it is the tiniest of tiniest margins. Okay, full valuation, I just add 30%. We're not even close to that. Then I said, hey, look, if you look at the historical valuations where Wesfarmers has traded in the past, I know it's like looking, driving by looking in a rearview mirror, but brokers have been fairly comfortable in the past paying around 27 times earnings. And if you apply that comparison to the current valuation, it comes in around about fairly valued. So we said Wesfarmers was around about fair value at the moment. The next stock, which was CST, and I said to you that volume was a bit like the volume on your stereo. If it's turned up real loud, the people across the road are going to hear it. They're probably going to get interested, come over and see if there's a party going on. And if there is a party going on and it's a nice party, they're probably going to join in on that party. And that is something we can apply to the share market as well. If there's lots of volume, people are going to be looking, it means people are looking at this. They may find an interest and they may become part of supply or demand, hopefully demand. So it is encouraging that we are seeing some volume coming into Castille Resources, but having said that, 2 million shares, it's not huge compared to other shares that might trade 20 million in a day when there's plenty of interest. The long-term trend it's a fairly new company, so the long-term trend hasn't been around for all that long, and it is fairly flat. We do have a nice short-term uptrend coming in, which is great, and some nice candles here on the 21st of October, a nice big long white candle, and that hasn't really been challenged, so that's impressive, telling me that demand is holding. We've had pop up in prices. Let's face it, if there have been people suffering in this stock for a long time, and they probably have been suffering, and John who put this in, hopefully he's not suffering in it, but if there have been people suffering in this for a long time, any pop up in prices is usually an invitation to get out, and that hasn't really happened. So it's telling you that the people who are in there, they're happy to hold on to it even though prices have gone up, and that's encouraging. buy, hold, sell. I said, look, if you've got it, absolutely hang on to it. I can't see any reason why you would get out. Okay, if you don't have it, I'm not seeing any fantastic reason, just on the basis of a little bit of a lack of interest at the moment from the market, not from me, as to rushing into it. A bit of a black candle sort of yesterday, bit flat to date, not a lot of trading it appears, and maybe we do just get it sort of drifting back into this area here. Why that area? Why do I draw these troughs where I draw these troughs? Well, I tend to be looking at previous peaks. So previous peaks, I mean previous areas of resistance where prices have turned down from, tend to act as points where prices tend to turn up from in the future. Okay, so the reason why I'm looking at that 24 level is because I know in the past we've had a bit of supply in there. Okay, so a few people got out here. Okay, the few people got out here. When the price is up here, many of those people are regretting their decision to get out. Many of them thinking, you know what, maybe I should have hung in there. Maybe I'll get, look, if it comes back to where I got out, let me buy some more. Okay, and the market will be anticipating that demand. And if it is really good, they'll want to buy ahead of that demand coming in. So it may not even get down there. And if it doesn't get down there, all the better. Okay, hard to say on a pretty scratchy stock like this, but conceptually, that's what we're looking for in terms of demand and supply. Okay, we are now cooking with gas with our stocks. The next one from Bippen is SYA, which is Sayona, if I'm not mistaken, and then I will try and backfill some of these other ones that I might have missed. Sayona looks fantastic. Let me zoom out a little bit. Sometimes I like to look at the weekly charts and just get that big picture view of what's going on. Looks fantastic there. Looks fantastic there. I can't fault this one. I can't see any reason why you would sell it if you had it. If you don't have it, I can see lots of reasons why you would buy it. Fantastic long-term trend. It's come back. It's pulled back to the short-term trend. And again, like I said, these zones aren't always perfect. Okay, for example, there it's gone a little bit through, and we're looking at, yes, it goes through, but is the demand still coming in? And it is. You can see that candle there building, it's coming back, so that's fine. It's not always perfect like that. So that's okay. The candles are getting better. I'd like to see, a little bit more inspiration here just in the last couple of candles, just to get the trend going, to show me that there's a bit more interest, but I'm happy to look past that on the basis of what otherwise appears to be a really fantastic trend. Now, I'm not familiar with the company, so I can't tell you where they're trying to kick over that very special rock, in which desert that rock is in, to find whatever it is they're looking for in that rock. But I'm guessing they're pretty prospective. So I'm happy with that one for Bippen. If you own it, hang on to it. If you don't own it, hey, I'm happy to buy that one literally as we speak right now. Now, I won't put some of these into the fundamental analysis tool because just based upon experience, some of them I know will not have any fundamentals. For example, Sayona Mining and Castille Resources. Energy 1, EOL. Let's have a look at that one. I do like to just go normal range there and just get my standard view. And the reason for having a standard view in the first place, and you always start here, and you can zoom in and zoom out. That's fine. But start at your standard view, because if you're going to zoom in, make sure that you go back to your default zoom. And the default zoom for me, I'm pretty sure it's about 18 months, as you can see there. Because I feel, the thing is, if your default zoom is too close, you're not getting really a feel for that bigger trend. If it's too zoomed out at the same time, because you can only fit so many candles on a chart, well, what's the price action at the end? I can't tell. So zoom, it's such an underrated technical analysis tool. Find an appropriate zoom. I use about 18 months, and then before you go to the next chart, you're allowed to zoom in or zoom out when you're looking at a specific item. But before you go to that next chart, make sure you go back to your default zoom, so that when you're scanning down a list, everything gets viewed on a consistent basis. Okay, that's the idea there. Now, I know I've digressed, but hopefully there's some value in that information for you. Energy 1, EOL. Looking at our default zoom, the overall trend is great. The short-term trend is fairly reasonable. I can't complain about that. This level here is 100,000 shares. So if you look at this level here, that's 100,000 shares. That's 50,000 shares. This is a stock that barely trades. It barely trades, and that makes it difficult to do any sort of technical analysis on it. What I can say with confidence is, if you're in it, hang on to it. I can't see any reason why you'd sell it at this stage. It's in a reasonable trend. If you're not in it, honestly, I don't know what that do, but it's not one I'm going to be gravitating towards on the basis that there's just not enough interest in there, and it's just so sketchy and fragmented on the chart. It's a hold. I can't buy it. I'm sorry. I wish I could say, hey, rush out and buy it right now. It's a hold for me. Just a bit of background on this one from Pavli. He says he likes the EU growth trajectory, and its latest acquisition looks like it'll greatly benefit this company. What are my thoughts on a long-term speculative buy? I don't know enough about it, Pavli, to give you those thoughts, but in terms of the chart, it's a hold. I can, for you, Pavli, see if it has any fundamental data here. And again, it's not my data. This data comes from Thomson Reuters, massive global data company, and the product it comes from is Refinitiv Icon. It's just the interface for that data, and you can see everything goes blank because these guys don't have any data for it. So, okay, next one is Imugene, which looks amazing. I call this, this is the stairway to heaven, isn't it? Just make sure I haven't broken my rule there. I know we've covered this many times, and somewhere around these arrows, we've probably looked at it and said it looks great, continue to hold it or buy it. My view on this one hasn't changed. We can see 200 million shares there, so it's a little bit more interest coming into this one. In terms of long-term trend, it is fantastic. Short-term trend has held, through here. We are moving back into higher peaks and higher troughs. The candles look fine. No objections. I don't expect it to just blast through 50, 51, 52, 53, whatever that is, 51.5, without a little bit of a consolidation, and it might end up looking something like this. So we'll hit that. There'll be a little bit of selling here. Why? Because there will be people who were watching this, who were in it, and they thought, no, this is going to the moon. Then it didn't go to the moon, it came back, and they were feeling pretty nervous at 40 cents, and they're probably telling themselves, hey, next time this gets to 51.5, I'm out of there. I'm not going to play this game anymore. Okay, and then there were people who got in at 51.5 who were thinking at the time, this is the best stock ever, this thing's going to the moon, and at 40 cents they were regretting it, thinking, why did I buy this thing? This is terrible. And if it gets back to where I'm now breaking even at 51.5, I'm going to get out. And that's called latent supply. So expect a little bit of supply in the system. If the demand is good, and I expect it will be just based upon everything else I'm seeing, you may see a little bit of time, a little bit of a pullback there, a couple of candles to work through that supply. Okay, I call them tests of supply. So you might have test 1, and you remove a bit of that supply. It could be test 2, and then the next one you get through from this big POS, which is a point of supply. It's a buy. I'm happy with that one. Look, now I should have read the rest of R. Boyd. I'm not sure what your first name is. Let's call you R. There is lots of selling between 48 and 51 cents. There you go. So hopefully R, that explains what you're observing. That explains what you're observing and why it's there. Let's have a look at Kogan, which has got itself a little bit of a pulse, hasn't it, Kogan? It's had a few interesting days, had a report out a little while ago saying they're working through their inventory issues, starting to get a handle on that. And that was, one of the big reasons why it had come down. The other big reason, of course, is it had a great run through COVID and spending patterns went back to normal. Let's look at the charts. Hey, on the way up, we talk about how spot on that long-term trend zone is at supporting prices. On the way down, unfortunately, it is also very, very powerful. And you can see how consistent it has been pushing prices down. Hey, that doesn't mean that it's the end of the world for Kogan. It just means it's didn't get through on this turn. And, I think it'll get through at some stage. But that doesn't mean I'm going to buy it here. What do I need to see before I buy Kogan? And it's a stock I am interested in. I do like the company. And unfortunately, what I don't like here, see how that it took out that trough. So we're high peaks and high troughs. We're building towards something. People, that FOMO, trying to get Kogan at a bargain, that was building, and then we just have these 3-4 straight days down and take out that low. It just takes away some of that FOMO, right? People think, oh look, I'll come back, I'll look at Kogan in another month. I don't think you need to look at Kogan until it does something like that. So until we break above this long-term trend zone, we come back, we test, we hold, we throw in those candles. What candles do we want to throw in? Something that looks like that, okay? At least something that looks like that, something that looks like that, and then a follow through, something that looks like that, something that looks like that. Now imagine those are 1, 2, 3, 4, 5 candles all occurring in this zone here, you are going to have a fantastic buy signal on Kogan. Until that happens, if you've got it, there's enough in there to hold it. I think I've said in these sessions that we've probably seen the low, but it's going to take a hell of a long time to call it a buy, and nothing in that commentary I think needs to change. So hold it if you've got it on the basis that we've probably seen the low. I can't be a buyer until I see exactly what I've told you about in that zone there. Kogan, I think it'd be quite interesting actually to look at the Kogan fundamentals. So let's get that going. Everything's very slow. I've got about 3 or 4 different software applications working in these sessions to make it all happen. KGN. Okay, so Kogan is loading on screen. I just need to double check that matches that, and it does. That's good. And there's some crazy numbers coming in here, and the reason for that is we've gone for historical PEs. So in the past, Kogan has been this fantastic growth story, and when we have earnings growing at exponential rates, we can't see them all here because they're going back historically. We're only going back 2020, but if you look back further here in the growth rates, so 19, 18, 17, they were really big. I mean, we've still got one big one there, 66 and then 30 there, right? So when growth rates are very high, companies tend to command high PEs. As they mature, the PEs that the market is prepared to pay comes down, okay? And this is what I was saying before about Wesfarmers. Do you value it on historical PEs or what the brokers are thinking? And I tend to default to what the brokers are thinking. Okay, but we have the option in here to go H for historical, F for future, and then dynamic is just everything. So dynamic will just go, well, let's just take the median of everything that we've got. Okay, and sometimes I use that as well, but that's what this little button here does. Let's go on the future valuation, and we can see straight away we go from hundreds of percent, things start to come down. Okay, but it does indicate that there's a bit of value here in Kogan. Okay, 32% upside that the model is suggesting. Now, the other thing we have to do here is have a look at some of these growth rates. So we go up to this line here and we look at earnings growth, and we say, well, what do we think about that? And this is where the discretionary element of fundamental analysis comes in. What do we think of it? Well, who cares what we think of it, first and foremost, but you might have an opinion. You may well have an opinion on this, okay? This is what the brokers think about it. This is not me. This is the data coming from Thomson Reuters, Refinitiv Icon. They aggregate the brokers. How many brokers did they aggregate? Well, they've got 6 estimates in total, so you're getting the aggregate of 6 brokers analysis here. And they're not unreasonable. They're not unreasonable, but they're expecting some pretty big growth numbers coming in there. Do I know enough about Kogan to argue with those? I do know a fair bit about the business, and I don't want to argue with those. I think they're fairly reasonable, maybe a touch optimistic, and this is where the change needs to come. Okay, so what we're talking about now is it a low risk stock, is it a moderate risk stock, is it a high risk stock, and can we please have a survey for people that are listening, and there's a bunch of you out there listening today. What do we reckon? You tell me, how should we value Kogan? Low risk, moderate risk, high risk? What do you reckon? And then I'll tell you what I think. And we'll see how this changes. So Vipin's gone for moderate. I can't remember who asked this question, but maybe they're the best person to answer this for us. What do they think? This is from Anthony. Anthony, what do you reckon? Hamid has said moderate. Lakshan has said moderate. I'm waiting for Anthony. Anthony, come on, type it in. What do you reckon? If he's still there, maybe he's gone. All right, we've all gone for moderate. So let's change this. And I think that's right. I don't think it's high risk, and it does bring the valuation down a little bit. And what we're doing here is we're changing the discount rate. So for stocks that I feel are fairly low in risk, we're using roughly the sort of the market discount rate. I think I've got pegged it at about 6 or 7%. I can't remember off the top of my head. I don't change these very often, so I don't need to. It depends on interest rates, bond rates, and things like that, right? And then if it's moderate, I think I'm pegging that up to about 9%, and if it's high risk, I think it goes into the teens. This is how we discount back their future earnings. The higher the risk in that stock, the higher the discount rate. And it's not just me that does this. Any analyst that does any of this sort of discounted cash flow analysis uses this model. They apply a high discount rate. If we went to high, now that's what we think. We all thought moderate. Everybody, boom, 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 boom. No, sorry. Anthony actually said high risk, high reward. Okay, I like his style. So let's go to high risk and see what it says. Okay, now we've only got 9.5% upside. Okay, and I can check my rates here. Let me check my discount rates. They're up here. There we go. So discount rate 13% based upon a risk-free rate of 3%. If I go low, what do I use for low? 5.5%. And they're all based upon the discount rate. So this also illustrates how important the discount rate is, right? This risk-free rate. Okay, and I've gone at the moment 3%. That is where I think over the next, sort of 3 years or so, interest rates are going to be. Okay, at the moment, market rates are around about 1.6%. Historically, they've been as high as 5%. So you can see I'm thinking, okay, over the next 3 years, interest rates are going to normalise to some extent. I don't think I'm going out on a limb by saying that, but we can see how the discount rates change things. Now, Anthony's gone for high. He said, okay, well, I reckon Kogan is high risk. I still think there's some money in it, though. I still think it's fairly valued even at these prices and using a high risk rating. We are not going to do that sort of analysis on all these stocks, but I think it's illustrative and I think it's helpful to give an understanding of not how I do analysis, but really how the entire research industry, how they operate. The next one is SKI, Spark Infrastructure. Off the top of my head, there is a takeover going on this as well, isn't there? So without further knowledge or intimate knowledge of what the details of that takeover are, I'm guessing you're pretty close to the price. At some stage, you probably get to the point where you say, well, I can either hang on and get the check from those guys, or I can just get out and go do something else better with that money. And maybe we're leaning more towards that second option. If I've said anything incorrect there, Anthony, please correct me. The next one is Ausnet Services. I'm looking at that. I'm guessing that's also a takeover bid as well. So ditto on that. If I've got something wrong, Anthony, be sure to correct me. I don't necessarily follow all of those stories as closely as maybe I should sometimes, because once the takeover bid's announced and you're pretty confident it's going to go through, then you start looking at other things. RHC is coming from Hamid. It's his turn. Let me do this, do that, and so I do not make my own mistake about Zoom. Go normal, and look, starting to build. I mean, if you look at and I'll just quickly do that, and what I wanted to show you was how boring and how awful RamsayHealthCare has been since the pandemic. So we've got 18 months there of very choppy, very range-bound price action, and this is a weekly chart, but everything we've talked about in the daily charts is still valid. So long-term trends, look, it's up. I like this little test down here. Oh, wrong way. It's a massive basing pattern if it breaks out. So I really like this. This is good. Look at that at the long-term trend zone. If there's support there, you should see it on the chart, and we can see it. And then look at this. And look at this. So that's really good. There's clearly a bit of supply coming in here. Okay. The other thing is, not only have we held that with the shadow there, but nicely in that short-term zone there. That's good. Okay, back to the daily chart, and a lot of these correspond as well, and that's fine. I can't see anything bad here. I think this is all good. I think this is all good. We are probably going to see a little bit of supply come in here, right? We talked about the idea of a test, so testing that supply, all right, for all the reasons that we talked about before. What do I think is going to happen on this one? Let's go zoom normal, and well, there's potentially a little bit of supply even at this point. See this little point here as well. Okay, so we might get. Look, I would rush out and buy it now. But I think you want to start thinking about it. And we're talking self-managed super funds here. We're not talking about short-term traders, right? Let's do that. Okay. I wish I had more room, but maybe even a little bit of a pullback here. I think even at 70. So we've also talked about this idea of getting in, in thirds potentially. So if you don't have any, assuming you don't have any, if you go 1/3 there, you might go, 1/3 on a break of this, and then down the track, and I can't go any further over here, but imagine that we did break out, but sometimes they break out and just keep going. That's the other thing, right? They just, boom, they just keep going. But let's say we broke out, we pulled back, and then we did that. And all of this, right, this bit here is happening at this area here, so above this zone, and that point there is maybe where you add that final third of the position. Okay, so Ramsay's it's a hold if you've got it. It's potentially a buy, assuming some of these things happen, and we just have to see if they do. Let's have a look at the Ramsay fundamentals. RHC, 22 there, 22 there. We can see that this is great because we've still got high, right? So let's change this. I'm going to go low. Hey, I haven't done any in-depth analysis of the stock, but I think we're pretty safe with low. It's coming in at fairly valued, even at these levels. What are the brokers saying? Well, the brokers are buy. Hey, each one of these brokers, and then myself, we've all got different spreadsheets, but ultimately it comes down to a spreadsheet and the various cells and the various formulas and our biases that go into those spreadsheets. Okay, so you're just seeing my view of the world. But the brokers have a buy in it, and that's why I have this information in here. I chose to put this information in my spreadsheet because as a technical analyst and as a trend following technical analyst, I'm all about what the market thinks. So as a fundamental analyst, I adopt that style as well. I say, well, this is what I think, but then this is what the market thinks, and I'm happy to be flexible with that. Okay, so the brokers have a target of 74.29, which gives a little bit of upside from here, and they're at an average of a buy. My model is saying, hey, it's probably pretty close to fully valued using a P of 24, and then we start to go back and say, well, is 24 reasonable? And historically, it's probably pretty spot on. Maybe, if you wanted to go a couple of bips high, you could. I don't think any of these are going to change things. That'll push it up, and then, historically. So we're somewhere between fair value or we're probably at fair value, I'd say. And then we say, well, what about their earnings expectations? Are they expecting too much or are they expecting too little? And knowing what I know about Ramsay, 27, bit of a recovery post-COVID as people get back into, elective surgeries, fine. And then long-term growth rates for this company are in the high single digits. Okay, so I don't think that's unreasonable to use a 14% average rate. I think everything's spot on here. I can't see any reason to contradict anything we see. So what we would say is that the chart is sideways because the valuation is fair. What is going to be the catalyst to push it up and make all those technical things happen? I'm not so sure. But if they do, who cares what I think? The technical picture would take over, and I would go with the buy. So that's for Hamid. His next one is WBT, and we have scratched on this one, haven't we? Let's get rid of those scratchings and make some more. I think it looks fine. If you've got it, hold on to it. Would I buy it? I'm pretty close to a buy. It's pretty good. It's coming back. It's nothing goes up at a straight line. We know that. So have some patience with some of these. And as long as they're still holding these levels, then they're fine. Now, if they start to break these levels, then you start to panic. Maybe not panic, but certainly start to get concerned if we start to do something like this with the wrong candles. And what does the wrong candle look like? We keep talking about the right candles, don't we? What do the wrong candles look like? Well, that's the wrong candle. If you want it to go up, that's the wrong candle. That is a wrong candle. Well, we won't see that, but that's not a great candle. None of these are good. So what does the wrong candle look like? Well, if you see it in there, you'll know. Until then, trust it and hang on to it. Would I buy it? I probably need to see a few more of the right candles before I rush out and buy this one. But otherwise, it's got the bones, right? It's got the foundations of a decent chart there. That's for sure. I won't put that one in the fundamentals, Hamid, because it won't have any. RNU is the next one. We have scratched on this one as well. Renascor, it's a hold for me. I can't see any reason why you would sell it. It's doing all those things we just talked about. Would I buy it? Yeah, I'm happy to hold it. Maybe it needs to do a little bit more to buy it. A couple of white candles will probably get me a bit more inspired. It looks like it's just gone really quiet, unfortunately, but it's solid. I'm okay with that one. Pavli, EDV. Let's have a look at that one. Endeavour Group. Okay, this is the Woolworths spin-off. Their hotels, etc., etc. It's pretty flat. I don't have a long-term trend, Pavli, so it's hard for me to do much analysis on this one because there's just, a technical analysis. You analyse charts. If there's not much of a chart, you can't do a lot of analysis. It makes sense. It looks a bit flat. It's not awful. It's not fantastic. Wish I could give you more, but I can't. And I'm not sure if we're going to have... I'll try for you, but I'm not sure if we're going to have a lot of fundamentals on it. for similar reasons. It'll depend on how many brokers are covering it. So this data isn't pulled out of the air, it's pulled from the various brokers. And if they're not covering this stock yet, then we won't have data. So let's have a look. And Hart, you know what we will also have some issues with here is there's no historical data, so that's going to make it a bit tougher. But we do have some forecast data. There are plenty of brokers covering this. That's very interesting. What about growth rates? Hey, I don't know enough about the business to talk about the growth rate, but high single digits I don't think is unreasonable given the broader economy. Risk level, you might want to go moderate on that given COVID. Maybe we're on the right side of it. Otherwise, it's a fairly stable business. Let's be generous and go low. We can't go historical here, can we? Let's go forecast, because that's the best way, I think, with a stock like this. And holding it to about a 22 PE, which is probably not unreasonable. It's looking overvalued. It's looking overvalued. And can only get worse, because if you do go to moderate, it's going to look even worse again. And maybe that overvaluation is somewhat reflected in the fact the chart's going a bit sideways. Okay, let's go for Lakshan. He's got VEE, which is Veem, which I covered this, didn't I? I covered this on this day on the call. It was actually inside that day. So it was after that day and as that day occurred. And I said, look, it looks great. And it did look great. And the fundamentals look great. And the chart looked great. But of course, I didn't know that while I was speaking, it was in a trading halt to make that announcement that I think the founder had sold some shares. And it hasn't done so well from there. So again, that's that's analysis and technical analysis. You only know what you know up to that point. You don't know what you don't know, which is what's going to happen next. What is it doing from here? It doesn't look great. I'm a bit concerned. Short-term trends has swung down, and instead of supporting the price like it did here, like it did, well, somewhat there. You know what I mean? There. It's look at how now it's resisting the price. Here and here. The long-term trend is providing some support, but if this is supposed to be a barrier where the demand is coming in, look, that demand came in right at the end of that barrier, and we're getting stuck in the zone. So the fear is we come down here. Don't think the valuation will probably allow it. From memory, when I did that work, it was fairly cheap, and I can have another look for you. But the technical picture does look like it is significantly weakening from when I was on that call spot on AusBiz I'm talking about, of course. Only one broker covering this one, so we'll have to assume that they are accurate, and therefore we also view some of this with through the lens of, hey, there's only one broker covering it. Future PEs versus historical PEs probably could accommodate, I was going to say 25, but this has gone 20, so that's quite conservative. It's definitely moderate. You wouldn't it's 100% not low, given that it's a fairly small player in a very niche market. But it's saying it's pretty cheap. So, how do you reconcile the fact that it's pretty cheap versus the chart? And again, I didn't do a lot of research into what happened after that announcement, to be honest. But even there, it looks cheap. So all I can tell you, Lakshan, is that the valuation looks good, but the chart doesn't. Let's have a look at CHL, also for Lakshan. Holy moly, Camplify. It looks amazing. I can't buy it here, and the reason why I can't buy it here, you must say, hey, the trend is fantastic. It is fantastic, but it's just so far away from this zone here. And I like to buy things when they're close to this zone. That's just where I'm comfortable. It's where I feel confident in buying things that I'm getting some value. So step one, find a nice long-term uptrend. Step two, buy things when they pull back to the short-term trend. Step three, when they do that with some nice candles. So yeah, I wish we could go back to this day and talk about it then. I would have said, hey, looks great, buy it. But on this day here, I have to say it's a pass from me. But the trend is amazing. If you had it, there's certainly some reason to hang on to it. This candle developing here, it doesn't look fantastic. Having said that, let me refresh the data, and it might get better. But this might even be at $5 too. Look, $5, big round number as well, big round number. Spent a lot of time at $2.50, and if you're spending sort of time around $2.50, when people double their money, they like to sell. So maybe this is one of those where you have a case to go minus 1/3 here, and putting myself in the shoes of an owner. I don't have these shares, but if it were me, if it was me, not think markets, if it was just me, I think I'd knock out 1/3 there at least. That's just my opinion. 88 for Pavley. And Audinate. Geez, it was this was struggling through here, wasn't it? So you just get these, sort of looking at these candles. Perfect hindsight, of course. Then you break. You kind of break through the short-term zone, which is not the end of the world. But what do you do after you break through it? You come down. You kind of don't get there. Look at those candles in there. It's just like reading a book. Hopefully, it's starting to become where you're just reading a book now, and you're just going, okay, well, I can see how that occurred. And then the short-term trend goes from support. It starts to become resistance. And look at this on that day. I mean, spot on. I can't make this stuff up. And now here we are dealing with this. And do we? To be fair, that's not a bad candle. And it happened at the right place. It would have been great if it was white. But then, we fade. Think of the demand that had to come in here, right? And then when you fade back into that demand, that's never a good sign. These candles aren't inspiring. I'd like, look, if you've got it, there's just enough to hold it, because it's, you do need to trust the trend. But we want to see great things happening at the top of that trend zone. Not in the bottom of that trend zone. Well, hey, it's got a history. It did it there, but this is let's look at this, because this is really good. This is kind of very similar, isn't it? So this is what we need to see. If you can get a cluster of these coming in, these white candles like that, that would be great. You can see the difference though. If you look at this candle here, how much more appealing that candle is on that first test compared to, say, this candle here. So there's still hope. Let's see some white candles come in, but it's looking a bit shaky, isn't it? Audinate. Let's have a look at the fundamentals. AD8, and that'll load up. Okay, thoughts on Audinate after it recently flagged supply chain issues. I haven't followed the story, Pavley, but I'm telling you what the chart looks like. No PE. Okay, no PE. No PE this year because we don't have earnings per share. And it's just saying no GR means there's no growth rate. And yeah, we could go to FY24, but once you start forecasting so far out, I get a little bit concerned. Even if we were generous and said that's moderate, working on that sort of a PE, fairly valued. A little bit of upside. And don't worry, the fact that I've gone out to 2024 is all discounted back through that discount rate. So it's even more, there's even more discounting applied, because we're not working on a current year's forecast PE, we're working on a forecast PE 2 years in the future. That is all taken into account. And even taking that into account with a moderate risk, there's a little bit of upside there. Having said that, if I go to high risk because, I don't know, there's some supply chain issues, then it becomes overvalued, but not grossly overvalued. Okay, and maybe that's what we're seeing in the chart, isn't it? So don't forget, all my technical analysis, all these charts, they all occur because we've got these analysts out there doing that sort of work. And if they're all coming to this conclusion that Audinate is kind of, it's not that cheap anymore, then you get a chart that looks like that. Okay, LKE coming for Bippen. Holy moly, LakeResources. Looks amazing. Look, I'm sure Bippen's got it. That's why he's asked for it. I know we've covered it here as a buy in the past. What do you do with it now? Bippen says he's a happy holder of this lithium stock, which is in recent rocketed, and it's rocketed and it's still rocketed, if I can paraphrase. It has. Now, the only thing I would just warn is too strong, Bippen. Counsel you on is just, again, this is just pure technical analysis and no work on the fundamentals and the prospectivity, if that's a word, of this business. But what I tend to find is when stocks, they spend a bit of time around a level, right? They tend to pause at double that level. So if it's spent a bit of time around 50, you might find, it doesn't mean it's going to crash from $1, but you might find it spends a bit of time around $1. Okay, and the other thing is dollar is just this, it's a big round number anyway. So people who got it at 50 said, if this thing ever gets to $1, I'm out of there. People who got in at, say 25, which I'm guessing maybe there's a little bit of time spent there, and there probably is, double that, 4 times their money and so on. Now, can I be so bold And there's no reason to do this based upon the candle and the trend and the chart. And that's why I don't use an all-in, all-out system. Can I be so bold, simply on the basis of this round number, to suggest, and it's just a suggestion, because, and the reason why I say this, because this, you know, hey, look at this, and then look at this, right? And we know that, you know, the price action tends to love that light green zone, and even when they look fantastic and amazing, you know, we do see them come back, and maybe, you know, you get that opportunity to repurchase that 1/3, you know, in and around that sort of level when these catch up to that level, 80, 85. Okay. Now here's the thing: if I'm wrong and this thing is at $2 tomorrow, you're either going to be happy that you've still got 2/3, or you're going to curse my name because I told you to sell 1/3, and that's the risk you take. Okay, Codan. And this is, yeah, look, you know, we keep talking about this long-term trend zone and what happens when it fails and how trends transition, and all trends do this. It's not one stock is different from the other. This is how it inevitably happens. But we can transition back to the upside. This one's got some really good signs that it's trying to do that. So the first step, going the other way, of course, is interacting with that short-term trend zone, but it's now pink, and bumping into it. That's not what I wanted. Let's get rid of a few of these. So, you know, interacting. Didn't work that time. Look at the candle. Supply there. Didn't work that time. Look at the candle. Supply there. This is impressive. I mean, that's probably the most impressive candle in the last 6 months, if anything, especially after this one. So that's super impressive. I like that one. And then we came back into that zone, we held it, and we talked about fading back into the low of a really big demand candle and how the market responds there. And we've faded back into this low, but we've seen more demand comes in. So they've had a bite of the apple, they want another bite. And this is a really special candle today. I really like that one. Does that mean I rush out and buy it? No, it's just not my style to get in that early. What I can say though, if you've got Codan, hang on to it. I think there's definitely enough in there to hang on to it. The next key level is going to be in here. Look, how do we respond in there? And you guys should know what candles we could see or should see, and then the price action that we want to see subsequent to that. So, you know, we want to see this, this, and this, and it's really kind of here that then I start to get involved and start to get interested with the right candles. You might say, hey Carl, you know, why didn't you just buy it down here? It was $11. It was a lot cheaper than waiting till it was $14.50. And I thought, well, I didn't know it was going to bounce from there. I had no idea. And, you know, why didn't you buy it here? You said that candle was amazing. Yeah, it is amazing, but you know, I need to see more something with more confidence, because there's 1,000 million charts out there right now. So I'm happy to wait. But definitely a hold on to that one for Kevin, and I reckon we will have some fundamentals here, so let's see if we can get them. And I know I haven't talked a lot about what the brokers are saying, but you know, you please look up here and get that, and then it does say what their targets are here. And the brokers seem to like this one a lot, don't they? Look, the mean target is 1804. That's 38% upside, and we've got 2 strong buys, 2 buys, so the brokers are pretty keen on it. I don't think it's a high risk stock, but I don't know enough about it to say it's a low risk stock, so maybe let's go with moderate risk. Interestingly, my model is not agreeing with them a whole lot. Don't think looking at this 17's unreasonable, although I could, based upon that historical. I could go historical and show you what will happen. Okay, 51.4 right now. You know, that's probably not right. We can go dynamic and use them all. You're probably going to get a bit closer, because you know this is now about where the discretion comes in. What do I feel is the right PE to judge this stock on? The brokers are seeing it going down. You know, it has been higher. You know, you make your own call. Earnings per share, I don't think that's unreasonable. You know, it's not like it's 1,000%. So let's give them the benefit of the doubt. You know, if I had to, I'd say, you know, give it a target of 20, and that's probably about right. So, and I know I'm right if I'm pretty close to the share price, because the share price should be fair value. It doesn't make any sense for it not to be. That's how markets work. Everything's factored in. Okay, Karoon Energy, this is my favourite stock in the energy sector. I think I've said that for about a year, maybe more, and it continues to be. And I don't think you need to, you know, minus 1/3 until it probably gets to $2, and then you minus 1/3 up there. But otherwise, hold it. If you don't have it, hey, it's had a really good run, right? So maybe you're closer to an exit, managing your exits on this than managing your entries. But it is nothing's changed. It's still my top pick in the energy sector, Kevin. I won't look at the fundamentals, because let's keep moving. Mineral, ooh, that's nasty, isn't it? That is nasty. Of course, you know, iron ore stock, lithium stock. Lithium might be going up, but iron ore's not. I won't repeat myself when I talk about how trends change, and you know, because I think if I'm doing my job in these sessions, you know, give a man a fish he eats for a day, teach a man a fish he eats forever. Hopefully, you're starting to do some fishing here, and you can come to your own conclusion on that, Kevin. So I don't need to say any more about the chart, but let's have a look at the fundamentals for you. Now, we need to change this back. Or did I not change that back for the last one? We'll have to go to the recording. If I didn't change it back for the last one, it shouldn't make a huge difference, all right? Because everything's accounted for. It shouldn't make a huge difference. It'll make some difference, but not off the charts, earthquake style huge. Okay, but we have got it right for Mincor. And it's saying moderate target. Now, target could be completely rubbish. That's the problem. It's probably not bad, actually. And with the mining companies, these iron ore companies are the hardest ones to value. They are the hardest ones to value because the brokers, look at this. You know, we've got an average reduction in their earnings year on year, 22, 23, 24 of 11%. And that's what makes it hard. So the brokers are looking past this commodity price boom and the cycle and saying on the other side, earnings are going to be weaker. Now, they could be wrong. They could be wrong. And this is where I start to come in here on these ones. And I don't often do it, but I go, well, you know, what if they are wrong? What if commodity prices are exactly the same today as they are going to be in 3 years' time? So earnings growth even is flat for mineral resources. Well, look what happens to the valuation. But then you probably can't leave this at moderate either. You probably have to go high. And then we can't, I mean, that was a 20. That was from my, you know, and then if we go F, that makes more sense. It's still, because of the high rating, looking a bit over. But that's too low. That is too low. See, I think, and hopefully you can just tell from the pain in my voice and how many adjustments I have to make to try and get something that is even close to market value. Because I know if I get close to market value on fair value, I know I've got something that is working. Because, hey, the current price should be fair value. And 15 is a fairly reasonable, you know, long-term, before I started in the markets, okay, and before the person before me started, this idea that 15 is fair value has been around, okay. 15 is fair value, 10 is cheap, 20 is high. So doing some of those things, and we're getting probably close to a reasonable valuation. But hopefully you saw also before that just how bearish the brokers are on some of these stocks at the moment. Let's keep moving. FlightCentre, UWL and ABB, and then we're done. Let's type in FlightCentre here. Okay, for FlightCentre, a little bit harder to do because obviously this was still expecting substantially negative earnings for this year. No surprise why. Then we're bouncing back to some profits next year, but that's okay. We can just do that in the model, and the model will start to take these things into account. I don't think this is high risk by any stretch of the imagination. I think it's probably moderate to low. I think this one's going to be fine. Let's go off for that one because we don't want that to be 0%. We want that to be the brokers, and this will start to make sense. Target P, you know, you could leave that at 15 because it's probably fair. You know, that is traditionally what markets believe to be fair value. But let's just go with the brokers, and 17.6 gives it a little bit more room. And I'm pretty happy with the valuation on this one. My model is obviously a bit more bullish than some of the brokers, but some of the brokers probably are, I'd say they're sticks in the mud, and you're going to see some upgrades coming through on that in the not too distant future. So look, I think it's pretty well priced here. If we do hold it to that target PE, you can see that gets a bit closer, doesn't it? So it all depends on how much room you want to give it. Now that's the fundamentals. We haven't done this before. Done fundamentals first and then looked at the chart, and chart's not bad. Not great. So it's had a bit of a drop there at the end. Let's face it, probably got a bit ahead of itself. Big round number at 25, and this is where that idea of, you know, going just when it's hot, you know, just doing that when it's hot. Just let them have a little, because chances are you're going to have a choice over here as to what you do. Now let's say you're faced with this. Let's say you had this, whatever, and you did the minus 1/3, $25. I bet you it spent a bunch of time at probably half that. Look, not far off it, right? And you went minus 1/3. And let's say that's today, and you're looking at that candle. Okay, now how many people who are still suffering through my scratchings, how many people would do this based upon that day? Okay, let's say that was today. It's pulled back to the short-term trend zone. You're looking at the candle. Is it a good candle? Is it a bad candle? Would you buy back your 1/3 there? Is anybody still here? No. Hamid says no. I think everybody's gone home. Gone. I know Pavli's had to go. That's fine. Hamid says no. No. And then you look, no. Yeah. So again, hopefully you're starting to get to this point where you can start to read these candles. Vivek said he's thinking to buy. The answer is no. I mean, look, you look at that. The market is not treating this as a support zone, and then you look at what happens after that. So look, the risk is here, and let me just tell you what you want to see. Okay, so this is the next level now. Okay, it can come down there. It could possibly get as far as this. I don't think it's going to go there, but I do think it's going to come here. I do think we'll see something like this. So this is for Vivek. Vivek, I would wait. I think you have to wait now, and you've got to see how it trades in here. Now, Hamid, I'm sure you are miles ahead of everybody else because you got that right, and you're thinking, well, that if we see a candle like this, and I know that's somewhat misshapen, but if we see this candle in there, that is your green light to go. Okay, based upon the valuation or the long-term trend or whatever it is. But that's the one you want to see. Okay, I think we've got one left to go, ABB, and then we're done. That one, I'll keep this fairly simple. It looks okay, and when I say okay, the only thing I'm worried about is these last few candles and the fact it did get to 5. And I bet you it spent time, around 250, not far off it. So that's why 5 is a problem. Not far off it. 5 is a big round number, and that's why I think you do stuff like this, even though the chart might look good at the time. You still do stuff like that. And then here's the thing: if we start to break through here, and this looks like it's going to do it right now. I mean, the market's been good for the last few days. Look how bad this one's been, and by bad I mean look at this, look at this, look at this. Yep. So you might be thinking, well, I'm going to do that. I can always buy back, and I might not sell the other 1/3 until maybe the long-term trend breaks, but I can always buy this one back. If we take out this low, I'll give you the number. So that low there, I don't want to see it get below here. That low's 468. So, below 468, that's, for me, that's the strategy. And then see how it goes, somewhere down here, because, we've seen, how many trends have we seen turn around today, everyone? Yep, and then head back towards that long-term trend zone. So just be a little bit careful on that one, I would suggest. What is my best ASX share buy at the moment? This is the last thing we have to talk about from Kevin. That's a tough one. I'd have to run the scan today and have a look. I've got a bit of a soft spot for that one, and that's doing well today. That's a nice chart. I did have a look at this one again the other day, and I thought that's starting to look very, very, very good again, and it has had 3 very good days. So you can see this candle here is the key, and the fact that we don't fade back. See how little we faded back into this. So this candle is everything. This is the one. This is the magic candle here, and it done all this. Let's face it, it's done all the stuff we'd like to see. These high peaks and high troughs. It's happening in a zone which we know should be there. It wasn't perfect, but it's how you respond after that, and that's nice there. And then we didn't, we didn't fade very far at all back into that zone. And then up we go. Neometals, if I had to give you one still, but I'm guessing if you've been listening to me for any length of time, Kevin, you've probably already got that one. Okay, we're at the bottom of the list. We're way over in time. Apologies for going too long, but if you hung around, you probably hung around for a reason. They are the next events. Next week, we're going to do the top 3 ASX post-pandemic winners. Ask the experts again in 2 weeks' time, and then the rest from there. That's where you register for them. Why think markets? We always have to talk about this. You can trade pretty much anything you like with us, either through a contract for difference or the actual share itself on over many, many markets, 4,100 shares and ETFs, $8 flat rate per trade, the lowest share-sponsored rate out there, 24/7 custom support and a world-class trading app. Of course, you get my analysis as well. Subscribe to us on YouTube if you liked this video, if you thought it was educational and you want to catch the next few. best to do that. And of course, hit like because you let us know that we're doing good stuff over here. That's it for me today. Thanks for joining me. All the best until we catch up again. Bye bye for now.